Alright guys, so today's going to be a little bit of a different video. I usually post about real ways to generate profit by selling your own physical products online, but today we're going to be talking about cryptocurrency. And specifically, number one, my own personal strategy for investing in cryptocurrency. Number two, the rationale behind it. Number three, some of the biggest crypto scams and lies. And number four, and potentially the most important, why you will not beat the market. I was honestly a little bit nervous to create this video because I know I'm going to ruffle some feathers. However, the reason for making this video is I felt such conviction as I'm seeing so many of my friends and family members start to invest for various cryptocurrencies. And I'm a messenger. I'm a messenger who has learned from some of the best investors on the planet that I see is not being taught or told at all in the crypto market. And I see this divide and feel the conviction to in some way fill this divide and hopefully help people from maybe losing money or just kind of rethinking the strategy that's best for them. This is not financial advice. This is my personal strategy for you to learn, but not telling you what to do. Seek information out for yourself. Consult with a financial professional. This is merely for education. All right, let's get to it. First, before I start investing thousands or tens of thousands of dollars into anything, I want to at least get some basic familiarity and learn before doing that. So before I invested a single dime, let me learn from people with decades of experience that are some of the best in the market. What do they do? What are the overlaps between their strategy? And then how can I adapt that for myself? So what did I do? Naturally, I went on audible.com. I looked at the top 5 financial/investing books. And the top 3 books are number 1, A Random Walk Down Wall Street. Number 2, The Little Common Sense Book of Investing. And number 3, The Intelligent Investor. And then compared and clearly saw that there was an insane amount of overlap backed by data. And the single strategy that all of these books pretty much completely agreed upon is the concept of index funds. Basically, an index fund is a way to buy a piece of a set of assets in a given market. So for a real example, there is something called the S&P 500 Index Fund. This is a way that you can buy a piece of the top 500 companies organized by market capitalization. This concept works with the stock market, with the bond market, and it can also be implemented with the cryptocurrency market. So basically, when investing in the cryptocurrency market, you have the option of either, exchanging your fiat currency, for example, your US dollar, for a certain amount of a crypto like Bitcoin. And you can either do this individually and try to pick and choose certain cryptocurrencies or projects to basically invest in or kind of exchange for, or you can invest in an index and basically buy a piece of all of the top cryptocurrencies, again, weighted by market cap. So why buy a piece of the top cryptos instead of picking and choosing projects that you believe in and have researched? There are actually 4 reasons. Reason number 1 is by diversifying in multiple assets instead of putting them all in 1 or 2 or just a few, is you can actually reduce your unsystematic risk. Number 2, by buying and holding an index fund over the long term instead of constantly buying and selling different crypto projects. When you buy and sell, you're constantly incurring more fees and potentially more taxes. So when you buy and hold in an index fund over a longer period of time, you can reduce your potentially taxes and definitely reduce fees and ultimately keep more of your profits. Number 3 is saving time and stress. When you have a system in place where you know exactly what you're going to buy and when, you don't think about it. You don't have to constantly be researching and you're worried and you have these ups and downs of this influencer said this and I think the market's going to crash and whatever. You just buy and hold once a month or whenever the time period is. And guess what? Your time is money. For me, literally, when I'm not worrying about my crypto investments, what I can do then is focus on other work. Like right now, we're uploading stock footage and we're already generating income from that. We're creating Etsy digital downloads. We are working on other projects to generate more income. And guess what I do with that income? I roll it into my different index funds, including my crypto index fund, and just keep the system going. And actually, number 1, it's less stressful for me. Number 2, I could potentially even increase my contributions to investing in crypto by just buying and holding. And reason number 4, where I might get the most hate, is the point of index funds allow you a better ability to capture the returns of the market instead of trying to beat the market. because statistics, data, and history show over the long term, you will not beat the market. And one of the biggest reasons is something called RTM, which stands for reversion to the mean. It's a phenomenon where asset prices and volatility eventually return to the long run average of the market. So for example, let's say that there's a hot new crypto project or altcoin. There's a new stock that comes out, a new tech company, right? And over the past 10 years, its returns have been crazy. Oh my gosh, a 400% return on investment. That's crazy. You got to invest in it now. Well, you know what's going on in my mind? Let's say it's for a stock, for example. Let's look at the past historic average of stocks. And let's say just for example purposes, it's 10%. So the average return of the stock market is 10%. Great, we know that. And then we know that this hot new stock, this new ETF or whatever it might be, is here generating a 400% return over the past 10 years. Wow, you got to invest, right? We know what's going on in my mind is that this high return, to meet that average, for it to return to the mean, it has to go below the average in order for the total return of that particular, whether it's a company, a project, an ETF, or whatever it might be, to return to the mean. So again, for me personally, I don't go about investing in crypto like I'm trying to beat the crypto market. Sure, I actually believe possibly that the cryptocurrency kind of market will overall, that average may be higher than the return of the stock market average over the long run. That's a big reason why I'm investing. However, I'm not trying to beat even the crypto market. I'm trying to capture the returns, if that makes sense. Now, here are 3 other deadly points that I've seen in the crypto space. So number 1 are what are called pump and dump scams, where a new hot cryptocurrency comes to the market. It has no value, it doesn't really provide anything. And what they do is they create basically this project, and then they reach out to influencers on TikTok, on YouTube, on whatever, and they say, hey guys, pump up our cryptocurrency, talk about how great it is, and we'll pay you in crypto. So these people get paid with that crypto, okay? And then what happens is they're hyping up this crypto. Everyone starts buying it because no one's coming in with the mindset, right? They're like, oh, I could get rich off of this overnight. Yeah, my friend told me about this. I'm totally gonna invest. They see other people investing and they get FOMO. This crypto is basically like a poker chip. Money, money, money is going on top. The price is rising, or the value is rising. And guess what? Once it sort of peaks, the founder or creator of the crypto pull out, and all the influencers also pull out all at that time, take the money that basically everyone invested, and then the thing crashes. So it's basically these crypto projects that are being used as kind of tools and scams to take money. It's something that I've seen and heard a lot about that I just want to make you aware of. Number 2, people usually only post their success. So let's say I have 10 cryptocurrencies that I've invested in, 10 altcoins, if you will. And let's say 9 of them have gone to zero. They're done, they're dead, they're maybe total scams, rug pulls, whatever. But one of them is going crazy high. You know what I'm gonna do? Especially if I'm an influencer in the crypto space, I'm going to take the results of the one crypto project that's going crazy and totally push the other ones to the side and let everyone know about that. Okay? I'm not saying that everyone's doing this or accusing anyone individually. However, I've seen it happen in my own space within the e-commerce space. It's definitely happening in the crypto space as well. And just something to also be aware of, that someone looks like they're just succeeding and winning all the time. You want to follow them because they are, but you don't realize that they're kind of in a way lying to you. Or maybe they're not lying. And that brings us to point number 3, which is something called the hot hands fallacy. There's this concept in basketball. Basically, whatever player is able to take the ball and put it in the hoop, keep giving the ball to him because he's got hot hands, right? He just keeps making shots. So a lot of coaches actually used to teach their players, hey, this guy over here, let's say LeBron, he keeps making these shots. I keep pumping the ball to him because he's going to keep making it. That's actually a fallacy. An entire study was done on this specifically for basketball. And guess what? This also applies to people who try to predict trends. And it basically is that when we see that someone is right often, we think, okay, they're gonna keep being right. A really great example that happened recently as of the creation of this video is Michael Burry. So Michael Burry is this very famous investor, and he was really made famous from the movie The Big Short, which I totally recommend that you watch. It's a great movie, and I love Michael Burry. Basically, he was able to kind of predict or see the housing bubble before it ultimately crashed. Now, recently Michael Burry shorted Tesla, and that didn't really work out well for him. So people kind of have this halo effect as well as this hot hands fallacy kind of playing together, where you look at influencers or even respected people and you think they just can't be wrong because they're right so many times. When I see someone and maybe they've accurately predicted when the Bitcoin would reach 60,000 and when it would go to 28, when it would whatever. And let's say they've been right 10 out of 10 times. That is a huge warning sign for me, because I believe that the 11th time is going to be the time that they're wrong, because nobody is always right. And again, that's another reason that I invest in index funds. I just cut out all the noise of what we call, Mr. Market, and just focus on trying to meet the market instead of trying to beat the market. And the fourth point that we all sort of do is when we see someone, whether it's an influencer, friend, or family member who invested in a crypto, let's say the crypto went way up and they sold out at the right time and made a bunch of money, even potentially became millionaires almost like within a few months, we have this tendency to think, wow, they're really smart. Wrong. That's not always, or potentially that's rarely ever the case. What you're gonna see is there are definitely people who are gonna get lucky. There are people who are going to beat the market and they'll think it's because they were smart, but really it was because they were lucky. And we have this tendency we see the result, hey, well, they made money, so they must be intelligent, they must be wise, I'm gonna follow them. Be very careful of that. I'm not saying don't follow them. I'm not saying that they don't deserve it or they aren't genius or whatever. But just know that people with genius level IQs fell for the Bernie Madoff scandal. Isaac Newton himself got caught in a bubble that burst, okay? People way smarter, literally the smartest man who ever existed has, lost and not been able to predict correctly. So be very careful in associating someone's success, especially their short-term success, with intelligence. Again, it depends on your focus. Are you focused on the short term and hopefully, gambling, making some money here or there? Or are you really focused on the long term? So now that we covered all of that, the next question is, how much do I invest in cryptocurrency? What percentage? Okay, first of all, understanding crypto, do you want to invest in it? Period. Because if not, okay, then the conversation's over. And if so, okay, then we can kind of continue the conversation. And the next kind of question is, really ask yourself, why are you investing? Are you investing because you really believe it is the future? You believe over the long term it will return higher than the stock market? Or are you investing because you want to get rich quick? Are you investing because you have FOMO and seeing other people supposedly, or at least from their screenshots that they're sharing on social, seem to be getting rich quick? And I'd really ask yourself this question, and I'm not telling you what to do, right? You can potentially get rich quick, maybe, I don't know, right? Or you could also lose everything in the long term, but just be really truthful and honest with yourself. And then remember this quote that Dave Ramsey said.
Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. Another proverb says, he who hastens to be rich will not go unpunished. 90+% of the people that I have met and worked with, the thousands and thousands of millionaires I've worked with over the years, did it gradually.
If you still want to invest in crypto, in terms of what percentage, how much to invest, I'll just give you, my personal, what we're doing is we take 10% of whatever amount that we have available toward investing, and we put that toward our crypto index fund. I personally would never go above 10% because for me, that is way too risky. And anywhere less than 1% isn't really worth my time and effort to kind of do that. So for me, between 1 to 10% of the total amount that I have available to invest every month is what my range would be for investing in crypto, but it's completely up to you. What is your risk tolerance? Are you counting on this for retirement? I do not count on crypto for retirement. I have a variety of stocks and REITs right now, basically kind of real estate stocks, as well as my own businesses that I'm creating that I'm kind of counting on for my retirement. So by this point, okay, I'm on board with crypto or I'm not. Maybe have an estimate of what kind of percent of portfolio this will make up. Maybe you're sold on the idea of index funds and you're wondering, all right, Sumner, kind of like where could someone invest in cryptocurrency index funds? And the answer is there are currently index funds available for crypto that, kind of track and invest in maybe the top 10, top 20, or even more cryptocurrencies, at least as of the creation of this video. However, in all the research I've done, none of them are really that great in my opinion. And the reason for it is fees. Whenever investing, whether it's a mutual fund, index fund, ETF, whatever it might be, always look at the fees. And right now, from all the index funds that I've researched, and please, of course, do your own research, I found that the fees are crazy high. I always try to keep my fees under 1%, kind of like total fees associated with whatever index, under 1%. With cryptocurrency, I'm willing for that to be a little bit higher because I know it's kind of new, emerging market. I believe the returns could be a little bit higher. However, all the current options of just, hey, here's a company or whatever that offers this index fund service, the fees that I've seen have been crazy high, or they only, track 10 or 20 cryptocurrencies, which I could just do on my own. So what I've decided to do is create my own index fund. I'm not selling this on you or anything. It's just something I personally do. So what I do is I take basically a Google sheet. I look at the top 20 cryptocurrencies for that month, organized by market capitalization. And then basically I have my amount, let's say it's like $2,000, for example. I take my 2K and then I break it out based on the percentage. And I'm gonna be making a full video about this. I'll link it in the description section below once it becomes available, on how to create your own crypto index fund. And basically what you're looking at is two main things with an index fund. Number one is having a fair amount of cryptocurrencies you're able to invest in, or crypto projects. And then number two is the fees, right? You want to have low fees with a lot of options available. Ideally, right, you would want to be able to invest in all crypto projects for 0% fees, but unfortunately that's not the case. For now, I basically invest myself. I use Binance US and use that as my main platform. And whatever cryptos that I can't kind of purchase on Binance US, then I use Coinbase Pro. And fortunately, even between those two platforms right now, there's some crypto projects I want to invest in that I can't. You could use something else like KuCoin, but again, that just gets things way too complicated. It is a little bit time consuming. However, I'm always on the lookout for, a better option. I'm ready. I want to give my money. If something has a decent expense ratio and kind of a broad range of cryptos that can be purchased, I'm all in. But unfortunately, I haven't found that yet. And lastly, I want to leave you with an interesting statistic that I came across recently. And that is that 88% of American drivers believe they are better than average. So let me ask you again, do you think that you can beat the market? Thanks so much for watching. If you liked the video, be sure to give it a thumbs up. If you'd like to see more crypto content, let me know in the comment section below. Regardless, thanks so much for watching and your support, and I wish you nothing but the best on your investing journey.